Listen, trading doesn't have to be overcomplicated at all. And it's pretty funny because when you first come into trading, you're learning all of these strategies, you're learning all the theory behind it, and it looks overwhelming at first. But when you become a consistently profitable trader, it's extremely simple. All you need is a good framework and a good entry model. And in this video, I'm going to teach you both of those things, how to identify a good framework and what a good entry model looks like. And this entry model is extremely easy. All it requires is one number. Alright, so let's begin by looking at our framework, because without a framework, forget about your trade. Forget about your setup. There is no trade without a framework. There is no narrative without a framework, right? The framework is this. You're looking at the two states of delivery within the market. We could either play within a balanced state of delivery or an imbalanced state of delivery. So once we've broken above the range high or broken below the range low, that is where you can transition into an imbalanced state of delivery. There are multiple different ways you play these two states of delivery, but essentially this capitalizes on the fact that the market always wants to move in fair value. That is where the market is most optimal. That is where the market wants to be in, because when it's moving in fair value, that is where the transactions are being mostly facilitated and the market is optimal, right? So within our consolidated range over here, both buyers and sellers are satisfied. The market doesn't want to move away from this range. So at the highs, you're going to have passive sellers protecting this level, and at the lows, you're going to have passive buyers protecting this level. Eventually, one side is going to get more aggressive. So let's say you are a buyer. You no longer want to facilitate anything within this level. You're no longer satisfied with this level. So what do? You increase your buying demand and you break above our range high. The increase in buying demand has to be significant, because this is a passive selling level. This is where you have large passive selling supply. So there are a lot of selling supply here. So the demand has to overwhelm this passive selling supply. Once it is able to overwhelm the passive selling supply, the opposing side will always try to step back in. And this is going to come in the form of either further passive selling supply at other highs, or aggressive sellers trying to dominate price and continue lower. That is what you are going to get every time you attempt to break out of either a range high or a range low. So this is going to provide you a framework for framing multiple trades, right? When you're in an imbalanced state of delivery, you're looking for price to continue in that specific direction. This is where you get those continuation trades on the failure of the opposing side trying to step back in. So let's say, right, we break above the range high, and then aggressive sellers step in and they do get rewarded. However, this range high, which now becomes an inversion level, is still holding clear, and these sellers get absorbed. This is where you could look for your continuation plays to capitalize on this imbalanced state of delivery. That is one way you could trade the framework. The second way you could trade the framework, the most obvious one, is when you identify this balanced range. Most of your trades are going to come from this high, and these lows over here. Anything in between, listen very carefully, anything in between is going to be low probability. You do not want to facilitate, you do not want to take any trades within the range, right? Because this is two-sided price action. The market is offering two-sided price action. It's not even a battle of orders. Buyers and sellers aren't even competing within this range. They are just satisfied and they're facilitating as many transactions as possible. So anything in between here, completely forget about it, right? That's going to change your trading. You don't need anything else. As long as you don't play anything in between the range, you're fine. Anything in the extreme, if you get a confirmation, then you can look for those entries. It's as simple as that. It doesn't get any more difficult than this, guys. Before we put the framework and the entry model together, I want to introduce you guys to this beautiful thing. This changed my trading and is going to change your trading as well. This is called the delta profile, also known as the delta cluster. But the important thing is it's delta, right? There are two participants within the market. There are two players. They are your aggressive players and your passive players. Aggressive players are those with market executions. They are your aggressive buyers and aggressive sellers, market takers, right? Passive players are those supplying to the market. So think of them in the form of limit orders. They are the ones supplying to the market and they're not necessarily taking from the market. In order for a successful transaction to be facilitated, an aggressive buyer has to be paired up with a passive seller. An aggressive seller has to be paired up with a passive buyer. So delta essentially measures the difference between aggressive buyers hitting the ask and aggressive sellers hitting the bid. This is what you get here. There are multiple different concepts surrounding the delta profile, but let's focus on one. And it is also known as your absorption. When you have large positive delta here, so in fact, let me make it more clear for you guys. All right. Looking at the bid and ask, on the right side is how many aggressive buyers hit the ask. On the left side is how many aggressive sellers hit the bid. Ask is your sell limits, bids are your buy limits. So here you have 38 aggressive buyers hitting the ask, you have 2 aggressive sellers hitting the bid. This delta is just the difference between the aggressive buyers and aggressive sellers. So 38 minus 2 is 36. Basic maths, right? If delta is positive, aggressive buyers are in control at this specific level. If delta is negative, aggressive sellers are in control at this specific level. So now, the concept of absorption comes into play when you have large positive delta or large negative delta, and it don't get rewarded with that direction that it is currently playing in. So here, large aggressive buyers, you would expect for these buyers to get rewarded with higher price action, right? Because aggressive participants are those who move the market, right? The market moves on basic supply and demand. If there is more demand than supply, the market is going to move either higher or lower. If there is more supply than demand, the market isn't going to move at all. It doesn't have to move to facilitate any outstanding demand. And that is a perfect example of what you get here. Now, whether this was off of a key level or not, it doesn't really matter. But the thing is, what I'm trying to show you is we still get that absorption anyway. Large aggressive buying demand, but the market doesn't move higher, which indicates that there is more selling supply than aggressive buying demand, right? I'm going to repeat that. There is more selling supply than aggressive buying demand. So the market has no reason to move higher. It's like when you're in an auction, it's basic auction market theory. When you're bidding for a car, if there is no one bidding at a higher price, then the price isn't going to move higher. It's the same thing happening here. So these aggressive buyers get absorbed, and then you have selling initiation stepping in. Initiation happens when the opposing side of the market, in this instance, aggressive sellers, they overwhelm after these guys get absorbed or they get exhausted, and here they're being rewarded with lower price action. This means this is a very strong confluence, by the way, for a reversal because aggressive buyers are now absorbed, and any passive buying at lower level, let's think in the form of buy limits, right? Passive buying, their supply is not enough to stall the aggressive selling demand. And as a result, these aggressive selling demand gets rewarded with lower price action. Hence why it is an extremely high probability reversal, and hence why that is why you only really need one number to determine a reversal. You don't need to wait for a market structure break. You don't need to wait for a market structure shift. This is going to determine everything, right? This is how the market functions. Nothing is ever random, guys. Nothing is random at all. So this is the concept of absorption and an initiation. If you look at a secondary candle, you get the same thing. Large aggressive delta, large aggressive negative delta dominating the majority of these levels. You do have aggressive buyers within these levels, but they don't really, they either get absorbed or they get overwhelmed by aggressive sellers. So they hold no importance within this reversal pattern, right? Now, this is where you could start to pair the framework and the entry model together. Because when you have a level like this, where aggressive buyers don't get rewarded, this could become your range high. Now, obviously, if you look over here, we also get the same thing, right? You have aggressive buyers, they don't get rewarded with higher price action. Look at how the candle is currently opening and closing. If you close with a large upper wick, then these aggressive buyers clearly didn't get rewarded. And especially if the secondary candle closes lower, because now these aggressive buyers are now trapped. They're underwater. Their position is underwater. So you could also extend this to your key level, right? And now this becomes your range high. You see that? You see how beautiful that is? This is now your range high. Obviously, if you look at previous price action, if you want me to even break it down, this is just one range. It's not the most beautiful range, but this is one range. You're looking at who's able to take control and break out the range. Here we clearly break lower before price retraces back inside this range. But when you look at it from a miniature standpoint, right, the range is ever so slightly shifting lower because now your overall range is here. And this was previously where you had that range. If it doesn't make sense, if it isn't so clear to you, you could also draw out dynamic volume profile. The most volume occurred here, high volume nodes, and the most volume occurred here. Right? But for now, where the most volume is happening within this price range from here to here is this range over here. But you can see the range is currently shifting lower. So that is where you have a bearish narrative, right? But this is your range high, passive protection level, and this is your range low, right? The reason why this is a range low is because it goes back to the same thing. Large negative delta indicating aggressive sellers are in control, but they don't get rewarded with lower price action. So now these guys are absorbed. You have your buying initiation. This becomes a passive protection level. There's a reason why these range highs and range lows work so well, right? There's a reason why. Because when price comes back into it, you could expect for the same participants in the form of passive buying or passive selling to protect this level again. There's a reason why the initial players were absorbed in the first place. The market isn't random. The market always has reasons behind every single move. So passive buyers are actively protecting this level. When we come back into it, right, you get the same thing. You get aggressive sellers getting absorbed again, aggressive sellers getting absorbed again, right, before price continues higher. And that is why once you have the framework for a balanced range, this is where trades become extremely clear. It becomes extremely clear, extremely high probability. Retest, aggressive buyers absorbed, selling initiation stepping in. So you always want to see selling initiation or buying initiation because this confirms the aggressive participants are stepping in after the passive participants have done their job. Passive sellers here done their job by absorbing these guys, and then you have aggressive sellers stepping in, doing their job with follow through. So now this is where you could look for an entry, right? If you was aggressive, you could just pretty much enter off of the first candle if you wanted, or wait for the secondary candle. Stop loss above the high, and then target the range low. Now, obviously, this isn't the best risk to reward. This isn't the highest risk to reward, but you really need to lower your expectations for trading. You're not always going to get those runners. You're not always going to get, 5R, 6R, 10R in one trade. Home runs all the time is unsustainable. You want to get base hits, and that is exactly what you get here. The highest probability trades with a base hit, low risk to reward. And you can start to look for the same thing here. You can look for longs as we come into the range low. You want to see if we get a confirmation. In this instance, we don't really get that confirmation, right? Because as we come into the range low, these aggressive sellers, they temporarily didn't get rewarded, but aggressive buyers were unable to follow through, right? Sellers still had the majority of control, still absorbing these aggressive buyers, selling initiation still stepping in. And as a result, right, once we break down this level, these sellers get rewarded. So for now, I'm holding back on my longs until you get something like this. Much more clear example. Aggressive sellers absorbed, aggressive buyers stepping in. Right? Remember what I said. Passive buyers done their job here. Aggressive buyers are doing their job here. This is where you can look for an entry. Stop loss below that level and aim for the range high. Right? 2R trade, get tagged in, and you're instantly out. It's as simple as that, guys. This is the framework. This is the framework for a balanced model. Once you've identified the balanced stages of delivery, you're just looking to play the extreme on confirmation that the opposing side is unable to take price lower or higher. So in this instance, the opposing side is aggressive sellers. If they're unable to bring price lower and break out of your range low or the range high, then you're going to get that reversal. Once you get that reversal, your next level of target is going to be the opposing range high. It doesn't get any more complicated than that. And you're just focusing on one number. You're pretty much just focusing on one number. The difference between aggressive buyers and aggressive sellers. This is why delta is so powerful. You're literally looking at your turning point to your trading. Now, what do you think we're going to do once we come into this range high? You're looking to see if passive sellers are still able to hold this level. If we are unable to hold this level, then there is a good chance we get that break and retest. And as you know, at the start of this video, as I mentioned, this is where you get that transition from a balanced state to an imbalanced state of delivery, confirmed with order flow. With order flow, you're literally looking at who is in control here. So we come up, there are already some bad signs that aggressive sellers, passive sellers might not be able to hold this level because you have these aggressive sellers over here, right? This is an early sign as we approach this range high that sellers might lose out on this battle since they are getting absorbed as we approach the range high. However, until we've broken out of the range high, you can't say for sure. Your job as a trader is to react, is not to predict. If you predict the markets, you're going to lose. You're going to be unprofitable, right? You might as well donate money to me. So we're coming to the range high. Let's see what we get. Aggressive buyers, they do get absorbed here. And aggressive selling, they initiate lower. So these guys are being rewarded. This is where you can look to go short. You can look to go short. This is a valid setup. But let's see what price does. Takes you out. That's to show you not every single trade works out. Even though it looks like the perfect A+ setup, coming into the range high, you're coming into the range high. Aggressive buyers are getting absorbed here, and aggressive sellers step back in. If aggressive sellers are unable to follow through and aggressive buying demand comes back into play, this is what you get, right? Because on the third candle, you have these aggressive sellers that get absorbed, and then aggressive buyers start to take back control until eventually all of these aggressive sellers get fully exhausted. And now where we had that selling initiation, so imagine these aggressive sellers over here, within these two candles, they are now trapped. So imagine they placed their entry here, stops above here. When the market comes higher and takes out their stop losses, that is going to fuel the move higher. That is going to provide more liquidity for the market to fuel the move higher, because their stop losses are in the form of buy stop. So now you take this loss here, that's fine. What are you looking for now? You're looking for a break and retest. Right, broken above the range high, you're looking if we could retest this level now. We come back down, and now this becomes an extremely important level. If we fail to hold this level, because now, this was previously a passive selling supply, once we've broken above, this becomes a protection level for buyers. Since in order to break above this level, you needed large buying demand to break above this level. So here, there is going to be a large presence of buying demand where you had previously to break above the passive selling supply level. So if we break below this level, then there is a good chance we could look to continue lower, and you could look for a break and retest to go lower back inside our range. And that would be a very high probable chance of happening, right? Because the market most optimal condition is within our balanced states of delivery. However, if this level holds now, where you get a selling absorption, then that is where you could look to capitalize on your continuation plays. This is where your expansion plays are going to come into play. But let's see what the market does. Textbook, absolutely textbook. I don't know what else to say. This is literally textbook. Aggressive sellers, they get absorbed there. Aggressive sellers absorbed, aggressive buying stepping in, and they get rewarded with higher price action. Further confirmation, these large negative delta, they also don't get rewarded with lower price action. So they are getting absorbed as well. Aggressive buyers are overwhelming these negative delta as well. So buyers are clearly back in control here. These aggressive sellers who try to bring price back inside our range, our balanced range, they fail to do so because they get absorbed here. This is where you can look for an entry. Enter on the next candle, stop loss below here, and you could target the highs over here, or you could target a rounded number. So 29,700, that is where you're going to have a large pool of liquidity. There is going to be a large presence of passive selling supply there, and you're going to get a battle of orders there. So if you don't have a target to the left side, right, even though you do have a target here, you can look to target a rounded number at 29,700. So let's play out and see what the market does. You get tagged in until eventually it hits your take profit. It's as simple as that. You're playing the framework. When you're in a balanced range, you're playing the extreme low or the extreme high. Until you break above our extreme high or our extreme low, this is where you could look for a break and retest to capitalize on the continuation play. And that's all there is to it, guys. Keep it simple. Don't overcomplicate it. Trading itself is already hard as it is, so don't make it 10 times harder for yourself, right? Have a good framework, have a clear entry criteria, and that's all you need. But if you really want someone to hold your hand and dive deeper into everything regarding the framework, order flow, auction market theory, and so on, then check the link in the description where I do offer one-on-one mentoring for lifetime. Apart from that, I really hope you learned something from this video and you found this video helpful. Make sure to like and subscribe, and I will see you in the next one.